G'day, I'm Scott Phillips from The Motley Fool and welcome to Motley Fool Stocks in Focus, our weekly series on both the Motley Fool Money podcast and on our YouTube channel, where we peeled the covers back a little bit on one of the companies that are either widely owned, in the news, we all might maybe know and love, and this one probably meets all of those three tests. And to go through it, I'm joined with Motley Fool analyst Vincent Wales. Vincent, g'day.
Hello, Scott. Good morning.
Mates, we are going to talk about Woolworths. Now, I think everyone probably knows Woolies, so we will talk about that in a second. Before we do, I'm going to throw a quick plug in and a bit of a quick description. So, firstly, I want to say, if you are watching this on YouTube, thank you. Thanks for checking it out. If you're not already subscribed to the channel, please do us a favour. Hit the like button on the video if you don't mind. It's good for me, good for Vincent, good for our egos, but also helps other people find the video. And then if you hit the subscribe button and the notification bell, when we release new stuff, we do one of these every week. We do Stock of the Month once a month. We do What I've Been Reading, Motley Fool TV, lots of great stuff on the YouTube channel. Please do that so you can get more notified to you by YouTube when we release it. And by the way, if you're listening to this on a podcast, check out the YouTube channel. It's youtube.com/FoolAU. If you're not yet listening to the podcast and you're watching this on YouTube, jump over there. Make sure you subscribe to it. 2 episodes a week, plus Motley Fool Stocks in Focus. So lots of good stuff there. Last thing I want to say, very quickly, this is recorded at the end of July 2025. Anything and everything can change from there on, so this is a point in time. And lastly, this is only general advice, not personal advice, so please keep that in mind. We can tell you what we think about a company or an investment. We can't tell you what you personally should do about it. That's your job. With or without a personal financial advisor, go and seek some advice if you need it. All right, mate, let's chat about Woolworths. The code is WOW on the ASX. I think we all think we know what it does. We probably do. But give us the cook's tour of the company known as Woolworths.
Yeah, it seems a bit superfluous going through what Woolworths does. So I thought I'd start with a factoid, which is quite interesting. It started in 1924, and it used to be called, I've got to check what it used to be called here. Initially, it was one shop called the Stupendous Bargain Basement Shop. That was what Woolies started off. So it was basically a dollar shop selling pots and pans and stuff like that. But as we all know now, it's Australia's largest, in terms of footprint, supermarket, known as the Fresh Food People. That's their tagline. And obviously, we all know the main supermarkets, the new metros, which are the smaller versions, which everyone's probably been seeing rolling out more and more in the more recent stores. It's got the Big W, which is kind of discount department store, probably the best description of it. It has tried moving a bit beyond that in Endeavour, which was its kind of alcohol division, but it sold that more recently. So obviously everyone knows it's strong brand recognition, probably got market share about high 30s in what's quite a relatively concentrated market.
Beautifully, nicely done, mate. Yeah, Woolies on almost every corner, so plenty of people will know. Maybe love, maybe not. Love Woolies. Some of the best repeat customer business in the country, by the way. We think about software as having high repeat customer uses. I reckon most of us shop in Woolies and/or Coles most weeks, if not more than once a week. Mate, let's go to the investment case then, because a big, well-known company can be a great investment or not, depending on what the business actually is like under the proverbial bonnet. So tell us about some of the pros. Tell us about the investment case for Woolworths, and then we'll get to the cons after that.
Well, on the positive side, on the pros, so obviously it's a very defensive stock. It doesn't matter what the economy's doing. You need groceries and food, so it's always got that supportive base to it, which means it's got a strong balance sheet. It's very cash generative, high turnover, and that means it's able to produce a sustainable dividend profile, which is important for some investors. It is also quite a large investor in online shopping, which is becoming more popular, and the digital side of it. So that's like maybe one of its growth areas as well, strong areas as well. It's got economies of scale. It's really only got obviously it's got Coles as the competitor and the smaller ones like Aldi, but it's very hard to disrupt. It's not that easy to build out a network across Australia in groceries. So. And of course, it's got the exposure to secondary stuff like health and convenience products, which it also does now.
Yeah, nice summary, mate. It's Kaufland, the European retailer, decided to want to open in Australia. I think it even leased a distribution centre. Eventually just went home and said, not too hard, we can't compete. So it does give you a sense of, now, by the way, some people say, well, that's monopoly power. Maybe it is. But if you're an investor and you own shares in something that is very hard to compete with, that's generally a pretty good starting point. Mate, let's flip the script. Let's go to the cons. You've laid out a nice argument as to why you might want to consider investing in Woolies. What would keep you away? What should our viewers and listeners think about before they make an investment in Woolworths?
Well, strangely, I think in some ways the pros are also the cons. So it's a low margin industry. Obviously, that's the business model, which means it's good for cash generation, but low margin. So it's got a lot. It's, as I mentioned before, it's a very competitive industry. Coles and Aldi nipping it at its heels, which keeps its profitability quite reined in and tight. And sometimes it operates on razor-thin margins. You may not believe that, looking at you look at the news, but I recently came back from Europe, and if you think that food is expensive in Australia, try going to Germany and Switzerland and buying your food there.
Right.
Obviously, the growth profile is relatively slow. It's linked to demographics, population of the country, general GDP. So it's not going to have the growth of, for example, a tech store, a smaller company, or one of the techs that have good margins of growth. It's also exposed to regulation, rising costs in a higher inflationary environment, and it's also very Australia focused. It's got limited international exposure for growth following its exit from its New Zealand exposure.
Plenty of Australian companies have tried to go overseas and have failed dismally. Even Tesco tried to go to California, famously. Tesco, the big UK retailer, you would know well, Vincent, came back with its tail between its legs. Very hard to expand internationally in general, and it seems really, really hard when it comes to groceries in particular. Mate, you've laid out a nice composition of the pros and the cons. I guess now we're not. Now, this is not a formal recommendation of the Motley Fool. This is just our attempt, as I said, to peel back the layers a little bit and give you a sense of what's under both the company's bonnet and the investment case. But I will ask you, mate, we're long-term investors here at the Motley Fool. We take a 5+ year time horizon. I'm going to ask you to think about Woolies in that context, given the pros, given the cons, given the current price. And again, this is at the end of July 2025, so things will change. But from now, mate, what do you reckon the odds are? Is it likely to be a market beater, or is it likely to lag the ASX?
So in my view, it's unlikely to be a market beater in the long term due to its mature profile, which we've just discussed. If you're looking for a sustainable dividend, that's obviously something to consider, as that's one of your main things. But it's more likely to underperform or perhaps track the market in a bull market, more bull market background. And of course, its defensive qualities, its higher chance of outperforming in bearish conditions. But overall, I think it's really more of a market tracker. It's a steady eddy, and it's going to be difficult to outperform the market over, say, a 5-year period.
Very nice. Thank you, Vince. That's Woolworths. WOW is the code. Thanks for listening on the podcast. Thanks for watching on YouTube. Subscribe to both for lots more great content from the Motley Fool. And until we speak again, Fool on.